Good day, everyone. I'm Carla Joanna Magdaat, an APM Spec teacher of Arlean University Azarizal Campus. Welcome to my video lesson in Business Finance. So for today, we will discuss the video lesson number 10, which is all about the financial planning and the sales budget and the schedule of projected collection. So basically, these are the topics in Chapter 3, Financial Planning, Budgeting, specifically Sales Budget. So before we start with the lesson proper, let's have our objectives. So at the end of this video lesson, you should be able to define planning and illustrate the planning process, as well as describe budgeting and illustrate the format of a sales budget. And also at the end of this video lesson, you should be able to enhance your critical thinking skills. So I want you to develop how you would think critically given different situations or different examples, which you can later on apply if you are planning to have your own business, or even you can apply this within yourself. Okay, let's start. So here is your concept note. So this video lesson comprises two topics. So we have the financial planning on the first topic and budgeting, specifically sales budget and schedule of projected collection, the second one. Now let's start with the financial planning. So financial planning is an important aspect of firm's operation because it provides roadmaps for guiding, coordinating, and controlling of the firm's action to achieve its objectives. Now I highlighted roadmaps and achieve its objectives because this is the main purpose of plan. It provides a map, it provides a guide so that we can monitor, we can perform whatever we need to do in order to achieve our objectives. So, setting up your goals and objectives without a plan is useless. We need to plan to achieve our objectives, as well as setting a plan or creating a plan without objective or target is useless too. It has no direction. So make sure we have our objectives and then this plan to achieve that objective. Now, I want you to introduce to some concepts in planning or types of planning. We have corporate planning, which is organized by responsibility, time, information to ensure that operational planning, project planning, and strategic planning are carried out regularly. Meaning to say, corporate planning is the head of all other plans. So corporate planning, it is in charge in the monitoring of operational plan, strategic plan, and project plan. So strategic planning and project planning, it is involved in decision making to optimize the organization's future position despite changes in future environment. Or when we say strategic planning, it is a plan carried out by the company so that they can strategically position their business in the industry. Given the competition in the industry, you need to implement strategies that will greatly benefit your business. In project planning, this involves expansion. So this optimizes the future of the business. So in project planning, this is the plan of branching out or making expansion and operational planning, which is the planning of existing operation or the day-to-day operation, the day-to-day monitoring. So this operational planning, strategic planning, and project planning are under the corporate planning. Now, steps in financial planning. So financial planning is prepared with this first step. Of course, the first step is to set goals or objectives. You are planning because you want to achieve something. So you need to set your own goal or objective for your company or for yourself if you are planning for yourself. Followed by identifying resources. If you have set your goals and objectives, now what resources do you have? And then what other resources do you need to have? After such, identify goal-related tasks. and then establish responsibility centers for accountability and timeline. So this is for monitoring, as well as establish evaluation system for monitoring and controlling. And lastly, don't forget to determine contingency plan or alternative plan if ever unfortunate events may happen. Now, they are saying that a plan should be effective. Of course, a detailed plan is useless if it is not as effective as it must be. So, effective planning, they say that there's a smart way to write management goals and objectives, as well as there's a smart way to plan out everything. So, SMART, I'm pretty sure you are familiar with this. SMART stands for S, specific, M, measurable, meaning to say you're setting your goals that it must be specific and measurable as well as attainable. Because if you have set your goals or objectives way too high, your expectation, then even a detailed plan will not achieve that specific goal. So it must be attainable and measurable, and it should be specific as well as are realistic and then time bound or time related. So in order to achieve an effective planning, you need to prepare your goals or objective in a smart way as well as your plan in a smart way. So another scenario, this one is more on a business perspective. So the goal is to establish a cafe business. Now, for your resources, identify. Did you check the location? Is it strategic? Or the raw materials and tools needed? Have you checked? Do you have these materials and tools? Or if not, where could you get these materials and tools? And then manpower and logistics and all other the preparation needed. For the task, of course, prepare the permit and other documents so that your business will be legal. The plan, the budget, the staffing, the people, how many people do you need, and then the analysis of market, the analysis of competition. And then for the accountability, assign tasks to individual involved. So you need to divide your task and then assign a person in charge for that so that you can easily monitor. And then evaluate, assess, and then monitor again. Also, don't forget to prepare the contingency plan, which is all about emergency fund, so that if any unfortunate events may happen, then you are still on the run in the industry or you can still survive because you have an alternative plan if everything will not work out. So again, this is another example of planning. This planning process is very helpful to you even if you are a student or aspiring entrepreneurs because you may use this in the future. So make sure that you understand this topic. Now, aside from planning, we are to discuss all about budget. So budget is already known to you because you are doing this or you are exposed in this every day because you have your allowance. So you are allocating specific amount of money for these expenses, for your transportation, for your school supplies. So that is what we call budgeting. Now, in this video lesson, we are about to discuss budget in business because we are to prepare different types of budget, starting up with the sales budget, production budget, and cash budget. Now, for this video lesson, we will discuss only the sales budget, and then production budget and cash budget will be discussed the following video lesson. Now, define first budgeting. Budgeting is the process of creating a plan to spend money or level of expenditure and expenses. Whereas budget is known as the estimation of resources and expenses over a specific period of time. So we are doing budgeting and we are having our budget for us to know and for us to save our money and then properly use our money or our financial resources. Now, objectives of budgeting includes planning, coordination, and control. Planning in the sense that you can now plan out your next steps because you have already assigned different budgets and the different types of budget needed, and then coordination of your department with the other department, as well as control, the control of every aspect of the department in the business. Now, it's not enough that you have prepared your budgets, but also you need to control your budget. You need to be aware of your budget and you need to abide with your budget so that you cannot compromise the budget allotted for something else. So, budgetary control refers to the use of budgets and budgetary reports to coordinate, evaluate, and control day to day operation to attain the goals specified by the budget. So, this means if you have this budget and if you are near the limit of your budget, then make sure that you will not exceed on that limit so that you cannot compromise the budget you have allotted for other activities. So you need to control your spending, control everything, and then check where did you go wrong so that you can address it on the next or the succeeding um, budgets you have prepared. And then master budget is the consolidation of all the budgets of the different subunits, so departments, branches, and section. For example, in business setting, so different departments have different budget, even as so you have budget for your school, you have budget for home, you have budget for the utilities expense, so on and so forth. So this is the same with this master budget. Master budget in a company is the summary or all other budgets are included in the master budget. So what are these budgets? So we have the sales budget, which is then used to prepare the production budget, used also to prepare the cash budget. So for this video lesson, we'll just focus on the sales budget. So now, sales budget is prepared based on sales forecast. Sales forecast, as you know the term forecast, just like in weather forecast, so a prediction of the weather in the coming days. So sales forecast is also the same with that. This is the estimation of the future sales. Sales forecast is known as the cornerstone in budgeting because everything started in the sales forecast. The budget preparation is based on the sales forecast. So, forecast is the estimating future sales, which is based on factors. It is not just a declaration that you will declare, okay, for this year I will be able to sell 1 million units, or this month I will be able to sell 500 units. Then the following month 600 units, then the following month 700 units. No, it's not like that. Your sales forecast must be based on factors. So these are some of those factors: GDP, inflation rate, development in industry, or your own production capacity. You cannot exceed the limit of your own production capacity. Let's say you are estimating your sales to be 100 units, wherein you can only produce 50 units. So it's a contradiction in the preparation of budget or competition or economic crisis. For example, pandemic. You cannot push through a higher number of sales because of this pandemic. Because in these trying times, many people have lost their jobs because of the pandemic. So we cannot force them to buy the product. So make sure that your forecast is in accordance with the following factors. Even competition. Let's say you are selling books and you have 5 competitors in your area. You cannot say that all the potential customers will buy to your store because you also have your competitors. Now, sales forecast again is based on factors, not just a simple estimate, but a wise guess and a wise prediction. So sales forecast is used to prepare the sales budget because sales budget is purely based on this. And then sales budget is also the basis in determining the production volume, and cost and expenses involved. Now, to better understand sales budget, I have here an illustrative example of sales budget. So as you can see, the sales budget is prepared per quarter. However, it could be prepared per year or per month, depending on the request of the management. So in this illustrative example, let's just discuss a per quarter sales budget. Now, if sales budget is prepared per quarter, make sure that you know the months involved in quarter one or the first quarter, second quarter, third, and fourth. So meaning in first quarter you have January, February, March. In second quarter, April, May, June. In third, July, August, September, and then in fourth, October, November, December. So make sure you remember that so that you will not be confused in the succeeding topics to be discussed because it involves primarily of per quarter budget preparation. So sales budget, our illustrative example is a sales budget of a company producing and selling bicycles, which is 1,500 pesos per unit. Now we have here the given per quarter. So 50 for quarter 1 or the first quarter, 300 quarter 2, quarter 3, 200, and 150 quarter 4. Now this is based on sales forecast. Remember that we are selling bicycles, and then bicycles, as we all know, is most used during summer, which is in quarter 2 because we have April, May, June in quarter 2, which are the months of summer. That's why we have gained a higher number of sales during this quarter compared to other quarters. To prepare the sales budget, you can do it in a table form. Just make sure it is presentable. So just like this one, make sure that you have the details on the left side, units to be sold, selling price next row, and then total sales on the last row. And then create columns depending on the given. So for this, we have 4 quarters. So prepare 4 column for the quarters and then another column for the total for the whole year. Now, if months is given, then you can just prepare columns on depending on the number of months given. So if it is January, February, March, 3 months only, then prepare 3 columns for each month and then the total. Okay, so the next thing to do is to input the units to be sold based on given. So we already have our given, so just input the amount or the figure, so 50, 300, 200, and 150. Now to compute for the total for the whole year, simply add 50, 300, 200, and 150. So I do hope you have your calculator with you. So 50 plus 300 plus 200 plus 150. Mentally add, you can get 700 units for the total units in 1 year. So you have 700. And then 1,500 selling price. So it is given, just input the amount with the peso sign, of course, because this talks about the price. And then to compute for the total sales, the formula is that units to be sold times the selling price. So units to be sold times the selling price equals the total sales. So for quarter 1, bring out your calculator, 50 times 1,500, so you will get 75,000 pesos. And then for quarter 2, 300 times 1,500, you'll get 450,000 pesos. For quarter 3, 200 times 1,500, you'll get 300,000 pesos. For quarter 4, 150 times 1,500 pesos, you'll get 225,000 pesos. And lastly, for the total for the whole year, 700 times 1,500, 1,050,000 pesos. Now, don't forget the peso sign for the total sales because you are multiplying the price per unit with the units to be sold. And then it talks about the total amount of sales. So make sure you have input the peso sign. Now to check if you have achieved the correct amount for the whole year, you can also add the total sales per quarter. even without multiplying 700 times 1,500. This is for double checking. So add 75 plus 450 plus 300 plus 225, you'll get 1,050,000 pesos. 1,050,000 pesos, which is also similar with this one. So for double checking purposes only. Now this is the first part of the sales budget. The next part is that after preparing the total sales, now you need to prepare the schedule of cash collections, which is based on assumption. Now this assumption may vary from time to time. It could be, for example, in this given example, 60% collected within the quarter, then 40% collected the next quarter. So this assumption is known to have been giving allowance to those customers that you have lent your product, or you have sold an account or for your credit sales, so that they could have enough time to pay you for their account. So it could be 60/40, 70/30, 50/50. It depends on the assumption of the company. So for our example, we have 60% collected within this quarter and then 40% collected the next quarter. So how to complete this table for the schedule of cash collection? So you need to prepare a column for quarter 1, quarter 2, 3, and 4, and then for the whole year, as well as a row for quarter 1 sales, quarter 2, quarter 3, and quarter 4, and the total on the lowest part. So let's start with the quarter 1 sales. So quarter 1 sales, we have 75,000 pesos. Now, according to our assumption, 60% of these 75,000 pesos, this is quarter 1 sales. So 60% of this will be collected during the quarter 1, and then 40% of this will be collected during the quarter 2. So to compute for this, you will have this one: 60% quarter 1, then 40% quarter 2. Now, let's start with the 60%. So 75,000 pesos on your calculator times 60%, or 0.60, is equal to 45,000 pesos. Meaning to say 45,000 pesos is collected during the quarter 1 also. So this amount will be written here, or will be put under the first column of the quarter 1 collection, 45,000. And then 40% times 75,000 pesos, we have 30,000 pesos, will be put in quarter 2 collection. Although this is a quarter 1 sales, it is collected in quarter 2. So make sure you have written it in the correct column. And then add the 2, 45 plus 30, we have 75,000 pesos for the whole year. Okay, so I hope you get the first one. Let's do the remaining quarters. Let's proceed with the quarter 2. Quarter 2 is 450,000 pesos, quarter 2 sales. So out of this 450,000 pesos, compute for the 60%, and then the 60% will be collected in quarter 2 itself. And then 40% will be collected on quarter 3. Now, you will not input the amount on quarter 1 because this 450,000 pesos is quarter 2 sales. Don't go back to the previous quarter. Okay? So, quarter 2 sales, 60% times 450,000 pesos, you'll gain 270,000 pesos. It will be put here. Quarter 2 row and quarter 2 column. So 270,000 pesos. Meaning to say, you have collected during quarter 2, 270,000 pesos from the quarter 2 sales also. So you don't need to write the peso sign because we already have peso sign in the topmost part. And then compute for the 40% of 450,000 pesos, you'll have 180,000 pesos, which is reflected on quarter 3 collection. Do you get me? I hope you get how it is prepared. So 270,000 100,000 pesos plus 180, then input the amount here. So you will have 450,000 pesos. Make sure that the comma is aligned so that the figures are on the proper alignment also. Okay, now let's proceed with the quarter 3 sales, which is 300,000 pesos. Now, 60% will be collected in quarter 3 and 40% will be collected in quarter 4. So 60% times 300,000, you'll get 180,000, and then you will put it in quarter 3 column. Yan. So 180,000 also. And then 40% times 300,000 pesos is 120,000 pesos, which will be written in quarter 4. So make sure you have the proper alignment. It will always look like this because of the assumption assigned or assumption given. And then add 180,000 pesos plus 120,000 pesos, 300,000 pesos. Lastly, the fourth quarter sales. So we have 225,000 pesos. It is stated that 60% will be collected during the quarter 4 also, or the fourth quarter. And then the next quarter, you can collect the 40%. So meaning to say, if you are on your quarter 4 or the fourth quarter, so your 40% will be collected on quarter 1 the following year. So this amount or the figure that will be the result of this 40% will not be reflected on our schedule of cash collection for this year because it will be reflected on the following year. So I do hope you can remember that. So now compute 225,000 pesos times 60%, 135,000 pesos, and then you will input it here in quarter 4. Okay. And then 40% compute 225,000 times 40%, so 90,000. So this 90,000 will be collected the following year. And then 135,000 is the only amount on this row, so just copy 135,000. Now you have the total horizontally. Make sure you also have the total vertically. So total for the quarter 1 collection is 45,000, bring down. Quarter 2 collection, 30,000 plus 270,000 is 300,000 pesos. Meaning to say you have an estimation of 300,000 pesos collection for the quarter 2. For the quarter 3, we have 360,000, and then quarter 4, 255,000 pesos. Then add all the quarter cash collection, so you'll get 960,000 pesos. And you can also add this portion, you'll also get 960,000 pesos. So it's just the same, just for double checking. Now that's how a sales budget is prepared. Starting from the computation of total sales to the computation of the schedule of cash collections based on assumption. Don't forget to double rule the final amount here for the total cash collection. So that's for the sales budget. I hope you can understand this because if you've gone wrong in sales budget, of course, your production budget and your cash budget is also affected. So make sure that you are correct in the preparation of sales budget. Okay, so this is how it usually looks. Sales budget per quarter. Just don't forget the double rule on the total cash collections, the lowest part. Okay, so that's it. In general, this video lesson covers two topics, the financial planning and budgeting, and then under budgeting, the sales budget specifically. So again, financial planning, always remember these are the roadmaps for guiding, controlling, coordinating of the firm's action to achieve its objectives. Make sure you are familiar with the terms, roadmaps, and then the achievement of objectives. In financial planning, we are following steps such as setting goals, identifying resources, then identifying tasks, establishing centers for accountability as well as evaluation, and then don't forget to prepare a contingency plan. for those unfortunate events, you can still survive if you have the contingency plan. Also, always remember that there's a smart way in preparing your goals and objectives, as well as a smart way in effective planning. So SMART stands for specific, M measurable, A attainable or assignable, R realistic, and then T time bound or time related. So I'm pretty sure you're familiar with this because these are already discussed in your grade 11 topics. So that's it for financial planning. The next part is budgeting. Budgeting, we all know that this is the process of creating a plan for level of expenditures and expenses, wherein budget is the estimation of our resources at a given time with the following objectives such as planning, coordination, and control. For budget, we are to prepare the different types of budget in a business. So we will start with the sales budget, followed by production budget, and then cash budget. So in this video lesson, we have started with the sales budget, which is based on sales forecast, which is a wise prediction, and then the cornerstone of budgeting. So sales budget is based on sales forecast, which is then used to prepare the production budget, and then also used to prepare the cash budget. So for this video lesson, let's start with the review or the generalization for the sales budget. Now, sales budget is prepared if you are given the units to be sold and the selling price. It is important that this is given in the a problem so that you can prepare the sales budget. So this is an illustrative example of sales budget per quarter, wherein you have the units to be sold times the selling price. So it equals to the total sales. So if you are to compute, then you will come up with this. Make sure that you remember the months involved in quarter 1, quarter 2, and quarter 3, and quarter 4, so that if you are given figures or units to be sold per month, you are able to consolidate all the months involved in the first quarter, in the second, in the third, and in the fourth, so that you can come up with a correct sales budget. And then after the sales budget, we're in the computation of total sales. Of course, prepare the schedule of cash collections, which is based on assumption. Now, assumption may vary from time to time. It could be 60-40, 70-30, 80-20, or 50-50. It depends on the given in the problem or the given assumption assigned by the company. So for this one, make sure that the alignment is correct. For our example, we have 60% collected in the same quarter and then 40% on the next quarter. So meaning to say, in quarter 1 sales, 60% of it is collected in quarter 1 also. So the amount should be written on the column of quarter 1. And then the 40%, which is 30,000 pesos, is written on the quarter 2 column because it is collected in the quarter 2 also. Same goes true with the other quarters. And then if you are on the quarter 4, so the 60% is written on the quarter 4, and then the 40% is not reflected on this schedule of cash collection because it will be reflected on the following year. Because 40% of quarter 4 will be collected on the quarter 1 of the next year. And then add horizontally and add vertically to get the total amounts per quarter sales and then per collections per quarter. Then add the total amount so that you can come up with the same amount here upon adding the figures on the right most also. So don't forget to double with the final amount in the total cash collections. So this is how the sales budget looks like and how it is prepared. And this is crucial because if you are wrong in the sales budget, tendency is that you cannot produce or prepare the production budget correctly as well as the cash budget. So make sure you are correct in the preparation of the sales budget. So I do hope you understand this topic because this skill is needed on the succeeding topics. So if you have questions, you feel free to ask me so that I could discuss to you whatever portion that confuses you so that I could address the problem. So that's it for this video lesson. I hope you have learned a lot and you can now be able to prepare the sales budget on your own, as well as you can apply the planning process on your own, for your own benefit, for your personal achievement or for your professional achievement. So before I end this video lesson, I have here your assessment. Given the following, prepare the sales budget per quarter for company A, which sells books 60 to 40% assumption. So the given is number of units to be sold per month. So make sure you are correct in consolidating the number of units to be sold per quarter. So that's it. I hope you can do the sales budget correctly. So thank you for listening and good day. Keep safe.